One space which has been firing up and powering ahead is, of course, the power sector. Very renewed interest is what we have seen this year in all the power stocks, and they're up anywhere between 25 to 40, 50%. But how much of it is actually fundamental? How much of it is momentum? And more importantly, what are the further legs and levers available for this rally? We'll decode all of that with Mr. Nikhil Nigania. He's the Director, Senior Analyst at Bernstein, joining us on the show. Nikhil, hi. Thanks so much for making time and speaking with us. Let's begin by just distincting in terms of where we are in the power cycle, because the green shoots is something we have heard about a lot. But do you think we are entering into a multi-year capex cycle? And if yes, which vertical is likely to see the maximum amount of capex?
For sure. Firstly, thanks for having me on the show. See, what has happened in the power sector in India, there are two concurrent themes playing out. First, well understood theme is the energy transition theme, which is further cemented by the G20 declaration to triple renewable capacity in India from about 178 gigawatts today to nearly 500 gigawatts by 2030. And the second more interesting theme, which has started to emerge in the power sector and in the power cycle, is an evening power shortage theme. So what has happened in India is we have invested largely in renewable generation capacity in the last 5 years, not enough on thermal or storage for that part. Hence, while in the afternoon times of the day, when the sun is out, we have sufficient capacity available. But in the non-solar hours, when the sun is not there, that is the time we are facing a challenge in demand supply. That is the time when shortages have started to come up to the extent of even 10 gigawatts on certain days in India. And this evening power shortage theme is what is driving an interesting part of the story, which many had not anticipated. It is driving renewed interest in coal-based generation. It is driving renewed interest in storage, especially pump storage, which was hardly talked about a few years back, and even on wind, because wind is complementary to solar. So wind is another leg which is seeing interest because of this evening power shortage phenomena. And lastly, on smart meters as well, because one more solution to this problem is to have different tariffs at different times of the day for which we need smart meters. So we are still, to your question, we are still very early stages in the cycle. We think it's a multi-year cycle and this is only the beginning. And it's a very capex intensive energy transition plus this evening shortage that we have to solve for going forward.
Mm-hmm. Nikhil,
in terms of the beneficiaries, if you ask me, they are the financing companies who gain, they are the equipment suppliers who gain, and thirdly, they are the developers or generation companies such as NTPC who stand to gain from this.
Nikhil, of this universe of the basket which you have spoken about, very select few large financiers of power infra projects. In fact, some of them are talking of diversifying their loan mix as well, and of course generators and the capital good part. Where exactly are the valuations the most compelling in proportion to the opportunity size that lies ahead?
Sure. So in terms of valuation, if we talk, I think generation, we still see some opportunity, especially on, like I said, on NTPC, which is one of our top picks, where valuations still are about 1.5, 1.6 times price to book, which we think can easily run up from here. And it has multiple tailwinds supporting it, whether it be new thermal capacity, new renewable capacity, where it gains from low borrowing cost, or even green hydrogen, where we think NTPC will be critical. Second, in the pecking order, not in our coverage, we think some financing companies especially stand to gain from this. So what had happened is the last leg of renewable shift that India did, a lot of it was funded by dollar bonds. And of late, what has happened is dollar bond interest rates have gone up a lot. And hence, many renewable companies are now switching or refinancing their dollar bonds as they mature with borrowings from these Indian financing companies. So these two segments at current levels seem interesting to us.
Okay, so that's the take coming in. Of course, financiers which are seeing a bit of a shift from dollar bonds into the Indian companies is a beneficiary, and of course NTPC, where the valuation is still supportive. But what about JSW Energy? Because you talked about a theme in terms of battery storage as well, and I think JSW Energy is at forefront of that. Talk to me about how you're looking at that stock, that sector, that space.
Sure. So officially, I'd like to clarify JSW Energy is not in our coverage, but thematically, we think they are making the right moves. So first, as you rightly said, on pump storage and storage in general. So they are one of the first ones in the listed entity space to sign a pump storage letter of intent with Karnataka for a new pump plant they'll build up in that state. And second, even on grid scale battery storage, they are the first ones to sign a contract with SECI for 1,000 megawatt hour battery capacity that they'll bring. Another interesting aspect of JSW Energy is then the new coal plant they are building. So they have a merchant coal plant called Ind Bharat Utkal, which they had acquired as in the NCLT process, which should be commissioned this fiscal year. And with that merchant coal plant, they can sell in the short-term market in the power exchange and make good returns given the power prices in the market today.
Nikhil, just out of curiosity, many parts of the power value chain, we know how they should be valued at, or the multiples which we should monitor. But on battery storage and some of the renewables, what is the ideal way of looking at them? On their proposed expansion plan, or would you wait for the numbers to trickle in? How do you look at them on valuations?
So, in our valuations, we do a DCF for most of these renewable companies, given they have an existing portfolio, but also a very strong growth pipeline, which they have. On a simpler metric, quite often used in the sector is either EV EBITDA or price to book. So on EV basis, a lot of the renewable standalone assets are sold at 8-9x EV EBITDA in India. But if you look at a platform, which is existing assets plus the growth opportunity, the multiples could be higher. We have seen transactions happen as high as 14x EV EBITDA in the sector, in the renewable space.
Okay, Nikhil, on that note, we'll let you go. Thank you so much for joining us. So, a holistic discussion on not just the generation part of it, financiers as well, which are likely to benefit, and how one should look at the battery storage and the new transformation that we are seeing in the energy sector.